Alright, it's 20 August, after the close, roughly 9 p.m. Eastern Time, and I will do a quick update on the markets. So here we go. Market doesn't care that we're overbought, and we just continue to grind higher. So this is the S&P 500, and here we are above all these moving averages. I'll even put up a real short-term average, 8 and 21 day, to show how far away we are even from the shorter-term moving averages. But we're getting right up to these all-time high S&P resistance. So again, I've been basically calling today and even yesterday not the greatest risk reward to be buying up in here, but you know what, the market doesn't care what I think, and it continues to grind higher. So again, I went over to the McClellan oscillator, which is starting to get up into these upper band here, which is usually, you know, telling you what market's a little bit overbought, but again, it's like the honey badger, right? Actually ticked down today, even though we went higher. The VIX RSI is also down near these bands, but what's interesting here is it's making a higher low with the market going higher. So that's actually quite a good sign, I think. At least, you know, that it's not as overbought then in as far as the VIX is concerned as it was you know, last week, and look at how far we still ran here in that condition. So that's pretty impressive. So but at the same point, I still believe risk reward wise it's a tough buy here unless you're real tactical, and you know, if you saw my Sifley trade, you know, you have these tight risk metrics. You don't mind death by a paper cut, 1,000 paper cuts. It's okay. You know, you get one trade like that, it makes up for a lot of paper cuts. So that's the S&P. What I do have that is somewhat again, I don't want to say outright bearish, because the Nasdaq has been the one that's leading this charge higher. But what is interesting in the Nasdaq, I do have a market extreme indicator on the daily, which basically says, again, it's just telling me that risk reward wise that this is not a level you want to be chasing up in here. And here's basically what I'm talking about. This is where, in this case, after this rally in the Nasdaq, we had MX indication. You know, it took a couple days, and then it finally came in. Same thing here. You know, had a MX bearish, overdone, if you will, indication. And it took a couple days, took a little breather here, and went down. So again, it doesn't mean market can't push a little higher here. It just means we're a little extended, and just something to keep an eye on. And again, a little pullback in the market would be healthy. In fact, you know, I'm sure everyone would love to see a pullback back in the Nasdaq back to this level at least. Let some of these guys who are caught short or not long enough to get back in. But again, the market would do what it wants to do, not what we want it to do. It'll be interesting too, to just on a side note, to see after, you know, usually after these, whether it's Fed minutes or Fed day, sometimes the day after, you get a little bit of you get a trend change. You know, I think this right here was the day after Fed day, if I remember correctly. You know, this was Fed day. Yeah, we did all right, everything's great. And next day they just wanted to crack this thing. So I don't know. I guess we got that Jackson Hole stuff, so that's going to be what the market's focused on next. So maybe, yeah, it is what it is. The Russell 2000 is again obviously the weaker index, but on a market cap, it really isn't that big of a deal, because it's such a small amount of money that to be honest, that's in the Russell. But it's coming back. It's clawing its way back, and it's actually has gotten some little bit of relative strength here on some days. So it is what it is. So now I'm just going to go over some potential, just real quick, tactical setups. You know what? I'll hold off on that right now. I'll do that in a separate